Good morning. Here's a comprehensive summary of the major financial, macroeconomic, and market news driving South Africa, the African continent, and global markets. Market dynamics are currently dominated by the global macroeconomic ripples of the Middle East conflict, which has rewritten interest rate projections and spurred localized corporate and legislative shakeups. South Africa, rate hikes and structural shifts. Inflation shock and interest rates. South Africa's headline inflation spiked sharply to 4% year-on-year in April, up from 3.1% in March, pushed by soaring fuel costs. This has brought inflation to the upper limit of the South African Reserve Bank's newly adjusted 3% target band. Consequently, economists from Nedbank and PSG expect a 25 basis point interest rate hike to 7% at next week's MPC meeting, marking the first rate hike since May 2023. Currency and markets. The rand is trading in a more depreciated range between 16 rand 45 cents and 17 rand 5 cents against the US dollar, heavily influenced by global risk aversion and fluctuating oil prices. The VAT ruling. In a landmark legal development, the High Court declared Section 7(4) of the VAT Act unconstitutional. This ruling strips the finance minister of the unilateral power to increase the VAT rate without prior parliamentary participation and debate. Investec Financial Year 2026 results. Investec released its annual results showing a resilient performance with profit after tax up 4.62% to 16.10 billion rand. The bank's long-term simplification strategy has successfully dropped its cost-to-income ratio down to 52.9% from over 63% 4 years ago. Energy funding. State utility Eskom is currently in negotiations with the World Bank to secure funding for a multi-billion-dollar nuclear program, which could potentially launch within the next 12 months. Africa, redrawing the monetary policy map. The closure of the Strait of Hormuz has severely disrupted international supply chains for fuel, food, and fertilizer, forcing central banks across the continent to abandon the expected monetary easing cycles. East and North Africa. Rwanda is expected to follow South Africa with immediate interest rate hikes to shield against imported inflation, while Egypt, Mauritius, and Nigeria are expected to hold rates steady as they assess the full impact of the energy shock. West Africa. Ghana remains an outlier, with domestic inflation still comparatively subdued at 3.4%. The Bank of Ghana is forecasted to cut its benchmark rate by 50 basis points to support growth, continuing an easing trend that started mid-last year. Growth outlook. Net fuel importing nations such as Kenya and Mozambique face severe fiscal strain due to elevated oil prices, leading to widespread downward revisions in regional GDP growth for the rest of the year. Global. War weighs on growth. Energy and commodities. Oil continues to hover at elevated levels around $105.90 a barrel due to ongoing shipping blockades. Meanwhile, safe haven assets remain highly valued, with gold trading at $4,536.46 an ounce. Geopolitical standoff. Global financial markets are experiencing deep risk aversion as traders closely track potential US-Iran peace talks. Comments from Washington suggesting a cautious approach to resolving the conflict have kept global equities and emerging markets assets on edge. Those are financial news for the 21st of May 2026.